Hello everyone. Today we wanted to go through a couple of important slides. We have already shown several of the slides during our recent research reports, but I think it's very crucial because right now Bitcoin is trading between 100,000 and 110,000. It's a very important technical level. And of course the question is this a correction? Is this a consolidation or is this a bear market? It's very important and we're going to go through these slides. We look at everything from the 21-week moving average. What are the long-term holders doing? What is the realized versus the market cap? The MVRV, short-term cost basis. I think these are very, very crucial indicators that helped us really prevent to suffer really the steep losses of the last bear market, and we were ready to really buy the new bull market. And I think that's why it's important to really focus on-chain indicators. It's not about emotions. It's really having like a structured approach to make really the right decisions. A lot of those slides we have already presented in a previous presentation in a written form. This one was, of course, based on October 22nd. Is Bitcoin entering a bear market? That was what we asked really during the October 22nd research reports that we published. And so far, we have seen actually more and more evidence that confirm this view, and that's why we wanted to go through the slides to give everybody a better heads up, because we need to be mindful really that only if we sell high we can really buy low. And I think that's why it's very crucial to go through these slides and really that everybody forms their own opinion. And if you want to see more of those analysis, let us know. Put it in the comments or send us a question. We're happy to do more of those videos, but it really depends if there's more demand. So of course the key indicator we are looking at is the 21-week moving average indicator, and every time Bitcoin falls below this level, we are going through some mini bear market at least. Of course, this indicator was the key indicator that protected us from the massive losses that a lot of people were carrying into the 2022 bull market when it converted then into a bear market. But I think we highlighted also the corrections of summer 2024, and we highlight the correction really of Q1 this year, and this indicator really confirmed some of those correction and certainly warned us. And those corrections were corrections of 30-40%, so they were not meaningless. And it's good to have a line in the sand, and this line in the sand is of course 110,000. I think we're going to see several times during this presentation that there were various indicators at 110 to 112,000, and that's why we actually have become quite cautious, and we sort of like warned our subscribers in our research report that really this level, if Bitcoin trades below 110, 112,000, it's really risk management, is really cutting long positions and being either neutral or actually bearish. But this indicator is again right now indicating that Bitcoin should be bouncing between 100 and 110. That Bitcoin is doing it, and I think that's why it's actually the time to really consider if this is a steeper bear market or not. Of course, what are the long-term holders doing? We have seen over the last 30 days that long-term holders have actually sold 185,000 Bitcoins. That's around $20 billion US. And long-term holders, they usually tend to sell when the price goes up. They tend to buy when the price consolidates or bottoms out or starts to rally during the initial phase, and then they start to step back and sort of like slowly sell into the rally. But when we look what happened actually in April 22 was really that those long-term holders were selling, and the Bitcoin price actually continued to correct lower from 40,000 to 20,000, if not even 15,000 at one point where we reached like the low. And I think what's very interesting is really that Bitcoin has been going down over the last couple of weeks. Really, we came from 126, we are now at 1,003,000. But these long-term holders actually keep on selling, and I think that's a sign that at least the long-term holders do think that it's they think it's really the time to sort of get out of the market, and that we're going to see some more lower prices. Of course, we have to see if they are correct or not. One of the key indicators that we have been using frequently also during the previous bear market was really the ratio of the realized cap versus the market cap. This is a very, very important indicator, and it has really projected the previous massive bear markets, but it has also projected this sort of like mini bear market. And as long as this indicator is negative, it was a time to step away, to step out of the correction, and really be on the sidelines or be bearish. And I think we're seeing this right now. And of course, we can also zoom in, then we're seeing it a little bit more clearly that the recent move lower in this indicator sort of matches the sort of like almost the worst time of March this year. But of course, Bitcoin had a small rebound and then sold off another 10% from that level. So that's why it's very difficult to say that we are out of the woods yet. It's very difficult to actually assume that the 100,000 will be the low of this correction. It would actually imply that we're going to break this low, that we're going to go lower below 100,000, simply based how this indicator it has usually projected that a deeper correction is in place. Yes, we have corrected for a couple of weeks, but when we look into the earlier correction, this year, it was really a correction of 2-3 months and not just a correction of kind of like 3 weeks as we're going through, currently. And then, of course, the short-term holder realized price every time Bitcoin falls below this level, which currently sits at 112,798. It's the average entry price of the holders of the last 155 days. But every time we fall below this level, Bitcoin tends to fall more, simply because people cutting their losses, they don't want to sit on losses. The short-term traders tend to buy and hope that the price immediately rallies, and if the price falls below their entry price, they tend to sell. And I think that's what we have seen once Bitcoin really broke this 113,000 level, that the price has fallen further. And that's also, of course, where we saw the October 10th liquidation once this price was triggered. And I think there were various on-chain indicators that were sort of confirming that this would be a deeper correction. And of course, now the market has really settled in this bearish scenario, really, where it's more about capitulation. And capitulation can take various forms and go on a little bit longer. But historically, when the short-term holders were underwater, Bitcoin prices have corrected lower, and it really takes a push through this level, ideally through a strong catalyst, that we would turn bullish only really above this level, and below it's really more downside risk and protection of capital, because we know that if we want to buy lower, we really need to sell high. And I think that's what we have done over the last couple of weeks, really, in our research reports. And when we really look, zooming in a little bit, this indicator has gone more negative during the Q1 correction this year. And also it indicated that Bitcoin had not really like a V-shaped rebound. It's more like a W-shaped rebound. And that's what we were sort of looking for, potentially a move back to 110 and then to sell off. But of course, this is sort of really, being really almost too cute from a trading perspective, because it's very difficult to project if we sort of rally and then sell off, or sell off, right now. That's why we think it's actually, worth staying bearish below this 113,000 level. And unless we break that, I think we want to focus more on the downside than trying to trade some of the upside momentum. And we have also seen this really since the October 10th correction, where Bitcoin had this massive liquidation event once Trump threatened China with 100% tariff at the end of the trading session on a Friday, really, when the US equity futures were about to close and only Bitcoin futures were open. We saw this liquidation. $20 billion of futures have been liquidated during that moment. But it also indicates, when there's less futures traders in the market, that Bitcoin really struggles to rally. And I think that's something we might be seeing here as well, because we have seen in previous corrections, once the futures traders are really retreating, once they're unwinding their long positions, it's very difficult for the market to rally again. And I think that's what has made us also quite cautious. We look a lot of open interest, we look at a lot of futures positions funding rates evolve. And right now they're not really bullish. And I think right now they confirm actually very cautious risk taking by traders. Coins days destroyed. This is of course the OG investors that are holding coins for a specific period. The way how we constructed the metrics really is that it gives us a warning signal. As soon as some of the long-term holders start to sell, of course, when the Bitcoin correction goes steeper and deeper, they don't want to sell. They're going to hold on to the position. So this metric kind of loses it's a little bit its predictive power the longer the bear market continues, but nevertheless it gave a warning sign, and I think that's why we have also been quite cautious, and I think it's one of these another on-chain data points that is quite crucial. But one of the most crucial indicators is of course the market value to realized value, which compares Bitcoin's current price to the average investor's cost basis, and right now of course, we can see actually that it has gone negative. This is, of course, a relatively short-term holders. This is not like the whole market. This is the holders over the last 155 days, and of course, this indicator shows that people are underwater, and when they're underwater, this is usually where a small correction at least starts, and it can go into like a deeper correction, as we have really seen during the late 2021, 2022 bear market. But what's also very crucial is really that the bull market momentum, as we have seen in around late October 2020, that bull market wave was a lot bigger than any of the waves we have seen in this bull market, and it really shows that it has been relatively low momentum. It has been relatively low exuberance, and I think that's why I think the market is prone to sort of quickly turn, because suddenly people are underwater, and I think that's why we always were worried that the bull market would run out of steam quite quickly. One of the interesting data points is of course the active investor price momentum, which is also known as a true market mean price. It represents the aggregate cost basis of coins acquired on secondary markets, serving as a proxy for the average entry price of active market participants. So again, when people are underwater, they tend to sell, they tend to liquidate. We have seen this during various phases, but of course here it was very interesting that since the summer actually the market was already running out of steam, and I think that's why we have been in this kind of dancing close to the door scenario. And again, there was a big wave literally a year ago during the Trump election, but since then, the second wave that we have seen after the Trump tariff resolution, or tariff truce really in April this year, the wave was a lot smaller, and therefore it was prone to run out of steam a lot quicker. This is of course also indicated by the short-term spend output, which tracks the profitability of coins recently moved on the Bitcoin network. And this indicates that over the last 18 months, 2 years, we had sort of like two to three bull markets, but each of those bull markets were relatively short-lived, and they ran quickly out of steam here. And once they ran out of steam, we can see this in wave one, in wave two, but also in wave three. Bitcoin actually struggled to move higher. And here, of course, we have seen that the waves are getting lower and lower. And historically, once, of course, this indicator goes really near zero, that's usually the time to buy, but we're not there yet. So it might not be the time yet to buy. It really depends, on the profitability, and when the profitability on the short-term basis moves towards zero, that's usually the level to buy, but we're not currently there yet, and that's why it might be best to really continue to stay cautious right here. Then of course the short-term holder net unrealized profit, which measures the profitability of coins held for less than 155 days by comparing their current market value to their realized value, normalized again by the realized value. it also shows really that there's ongoing evidence of capitulation, it's weak momentum, and it sort of fits into this scenario. But when we compare the previous corrections of summer last year and Q1 this year, it indicates that this correction can go on a lot lower. It can go on for a lot longer, and I think we are nowhere where at levels where we were before. And that's why I think it's maybe too early to even expect that Bitcoin would have a sustainable rebound today or this week or even this month. It might really be that we're just trading around in the best case scenarios is 110 to 100, 100,000 level, really, that we sort of are trapped in this narrow range, where probably it's best to sell upside calls and really deep downside puts, really, to collect some carry, with the next catalyst probably coming then from the December 10th FOMC meeting. But this on-chain indicators actually really makes us more cautious. And of course, when we look at these other indicators like the ratio of Bitcoin versus the true mean price, which calculates as investor, the investor cap divided by active supply, reflecting the average cost basis of coins actively held by market participants, which also indicates again that the momentum has been weakening for short-term holders. Of course, we know they are underwater, but I think when we look at in general, when the average or the whole Bitcoin network is only up actually 25% on all their holdings. This is a very similar level where I think MicroStrategy has acquired their Bitcoin over time. And of course, historically, we have entered into like a real bear market if Bitcoin falls below the true mean. As we can see here, the true mean is around 82,000. That's a level where the real Bitcoin bull market would end and the real bear market would start. That's kind of like the official number when we look at all the previous massive bear markets. But of course, if we would go below this level, we also would go first through the 93,000 level, which of course is one of the last, I guess, support levels before there is a large gap, like an air pocket almost, because there has been very little turnover, very little trading has been done between, when Trump was elected, Bitcoin was at 68,000 and it literally ramped up within a week or two towards 93,000. So very little has been done in terms of trading within this week, and that's why this indicator sort of sits in the middle. If it would be tested, I think it would be quite a thing. I think we cannot rule it out, but right now we are more concerned that Bitcoin would break below 100,000, and based on various indicators from trend models, these on-chain indicators, we would stay bearish as long as Bitcoin stays below this 113,000 level. So of course, here again, when we zoom in, we can see that the whole Bitcoin network investors are up only 25%. This has massively decreased from up 75%. But because there has been so much turnover at the top during the last couple of months, where really the OGs, the legacy investors, sold Bitcoin to new investors, that's when the average, or that's when the true mean really has increased a lot. We came almost beginning of the year, the true mean was literally in the 50s and 60,000 really, but then it really quickly ramped up because again there was so much turnover, and that's really the worry, that there has been a lot of investors buying Bitcoin at these levels between 100,000, 126,000. And that kind of brings the market into a more kind of fragile environment, because people are probably willing to throw in the towel a lot quicker when they bought at 120,000 and suddenly see that Bitcoin is at 100,000, versus if they see Bitcoin at 100,000 and they have bought Bitcoin at 50,000. But again, because so many of these legacy wallets have been selling, the whole market is up only 25%, which is actually not a lot compared of all the money that has gone in. So In summary, if Bitcoin is trading below the 21-week moving average, I think that's a crucial indicator. For us, the zone is really the 110 to 112,000, where we would be, bearish below and bullish, above. But of course, as long as the on-chain data does not really turn around, the worry is more on the downside. And if you have any questions, please let us know. Send us an email. Like this video if you thought this useful. Let us know if we should put more of those videos out. We're happy to do so, and try to explain a little bit better what's going on, because this is a very crucial period for people, because only if we can sell high we can buy low. And I think we want to buy low, of course, and prepare them for the next bull market, which is probably coming after the Fed turns more dovish. That's for us the key indicator.